Every company has one clear, undisputed goal for its existence, and that is to generate as much money as possible, whether through selling goods, providing services, or otherwise. But sometimes it is possible to pursue both the goal of making money and contributing meaningfully to society. That is the case for Beyond Meat. This plant-based alternative meat producer gained popularity during the 2010s with a clear mission alongside generating profit: to make the world a better place by fighting climate change through changing consumption habits of meat eaters. It was a bold and noble vision, and for a time it paid off. However, with the turn of the decade, the narrative for Beyond Meat shifted dramatically, and they are now struggling to stay afloat. So what happened? How did such a successful, innovative company seemingly go from being on top of the world to having their stock barely hovering above $1? This is the story of Beyond Meat and the reason for its downfall. While meat alternatives like veggie burgers have existed since the 1980s, they always struggle with tasting just like vegetables. Now, for some this is acceptable, but if you're trying to cater to meat eaters, this won't work, and this is why they lack that mainstream appeal. A gap that a young Ethan Brown clearly recognized. Born in 1971 near Washington, D.C., Brown had a relatively normal childhood during which he developed an interest in vegetarianism. But it wasn't until much later, however, that this interest would lay the groundwork for his business empire. In 2009, Brown visited a research center at the University of Missouri. There, researchers were working on finding additional uses for soybeans, which is a major export for Missouri. The group was developing technology which was capable of replicating the textures of meat using plant proteins, and this caught the attention of Brown. Brown was fascinated by this innovative new technology and could see the potential that it had. He soon struck a deal with the research group to license the technology for himself. Later that same year, he founded Beyond Meat, a company aiming to produce plant-based meat alternatives. Brown's motivation extended beyond vegetarianism. He was deeply committed to mitigating climate change. He saw this new method of creating meat as a powerful solution given the significant environmental impacts of beef production. When interviewed on the reasonings for founding Beyond Meat, he would emphasize this focus on combating climate change, but also cementing the clear mission of the company by stating, quote, "I wanted to create plant-based meat that tastes so good that meat eaters would choose it over real meat," end quote. And with his new technology in place and initial capital secured, he set out to achieve exactly that. Brown began literally cooking with his company for a couple of years, trying to perfect the technology and create viable products which could be sold, which he finally managed to do in 2012 with the release of Beyond Meat's first ever product, the chicken-free strips, which became available at some Whole Foods stores in California. They would soon prove to be a massive hit, and the product would expand to other Whole Foods locations throughout the US. And a year later, Beyond Meat would launch its next plant-based product in the form of beef crumbles, which consisted primarily of pea protein. But it would be the company's next product, the Beyond Burger Patty, that really cemented it as a serious producer of plant-based alternative meat product. The patty is made from different plant-based proteins, and most notably also includes red beet juice, which gives it that bleed ability that normal burgers have when they are cooked. This really set the product apart from previous alternative meat burgers on the market and really shot up the popularity of Beyond Meat as well as the revenue. And since no other product like it existed on the market, this would be Beyond Meat's catalyst for the company really taking off. In October of 2016, Tyson Foods, the biggest processor and marketer of beef, chicken, and pork in the US, took notice of Beyond Meat and announced an investment agreement where they would take a 5% stake in the company. This solidified Beyond Meat as a serious player in the plant-based meat industry, and as soon as this news hit the financial markets, other investors lined up as well, such as Bill Gates' investment firm and also Kleiner Perkins, which is another well-known venture capital firm. This also included numerous celebrities such as Leonardo DiCaprio, Chris Paul, and Kyrie Irving. Beyond Meat had now not only managed to create products that changed the way people view plant-based meat, but also managed to acquire the financial backing from some of the biggest names not only in their industry, but the entire world. And if they could manage to grow the alternative meat market to the same size as alternative milk products, then there would be no saying in how high they could go. It seemed as they were on the right track, and this would soon materialize in their next big step to take the company to the next level. After perfecting their plant-based burger patty through different iteration and versions, and also introducing new products such as their plant-based sausages, Beyond Meat decided to scale up production rapidly. By 2018, they had tripled the size of their primary production facility in Missouri and were now delivering their products to more than 30,000 restaurants and retailers nationwide. It was this push that also made the company decide that it had grown to a size where they could introduce Beyond Meat on the global stage. It was time to take the company public. In May of 2019, Beyond Meat would become the very first plant-based meat alternative company to be listed on the NASDAQ. And its first day of trading could not have gone any better. With an initial price of just $25 a share at opening, the company's stock price had surged 163% throughout the day, closing the stock at $65.73 a share. This success meant that Beyond Meat had not only had the best IPO of 2019, beating out companies such as Uber, but also had the best IPO of any new company since the start of the new millennium. And Beyond Meat was now worth billions. It was truly the perfect time to do this, as the world's stance on veganism and overall alternative meat products had shifted. These types of products had now become a possible substitute for red meat, and other companies would take notice of this. In 2021, Beyond Meat made headlines when they announced plans to partner up with McDonald's and Yum brands, which own fast food chains such as KFC, Taco Bell, and Pizza Hut, to create co-branded specific products like the McPlant, the Beyond Meat fried chicken, Beyond Meat pepperoni pizza, and a plant-based meat taco. The company had now officially become part of the mainstream, and it seemed as there was no way of stopping them. However, as with everything else, all good things must come to an end. In late October 2022, a shocking news story would hit the front pages of the financial world. Beyond Meat was cutting a fifth of its global workforce due to changes in their financial forecast. It stated concerns surrounding rising inflation numbers and shifting trends and how this was going to impact the company's bottom line. Due to this, Beyond Meat lowered its expected revenue numbers, which sent a shockwave throughout the financial markets and negatively impacted the company's stock. But what had happened that created this drastic shift, as the company seemed to be unstoppable just a year ago? Well, it was honestly a mix of different things. First of all, the overall hype surrounding plant-based meat products had died down at this point, and it seemed that the actual taste of these products was not good enough to permanently sway usual meat eaters to shift. And the price point didn't help either. Reportedly, Beyond Meat would sell their alternative meat product for more or less $12 a pound, whereas ordinary beef would still sell for $5 a pound, which is a big difference in a time where everything is becoming more expensive and people are trying to find ways to save money. This fact, alongside the dying of hype, would make the lowering forecasts understandable. Another thing was also the overall confusion going around surrounding their products. Beyond Meat prided themselves with their products being a better and healthier alternative than regular meat. However, in recent years, news articles have raised concerns about the fact that plant-based meat is an ultra-processed food, and if it can still be deemed as healthy despite this fact. And this is also where some have gone to claim conspiracy theories about the meat industry trying to push this narrative to better protect their own bottom line. Nevertheless, whether it is true or not, this impacted Beyond Meat's ability to generate revenue. And this was a problem because, as you see, Beyond Meat, despite its great success and cash that it has raked in, has never actually had a profitable quarter since its very inception. The company has never generated a profit, and while this is not a problem when you are a growth company focusing on growing your revenue and sales figures, this becomes a problem when you're seeing your revenue numbers falling. It also didn't help that Beyond Meat experienced controversies of their own which ended up plaguing the company, such as the reporting of mold in some of their products, and probably the strangest of them all, their own COO being arrested for biting someone's nose? What the fuck did I just read? And 2025 does not seem to be a good year for them either, because Beyond Meat announced earlier this year that they were going to exit the Chinese market due to it proving too difficult for them to operate in, as well as probably the biggest news of them all, their plan to restructure their debt. Now, this decision basically consisted of Beyond Meat erasing parts of their current long-term debt and turning it into stock, which is great for their balance sheet, but this also means that more stock of the company will be issued and the overall number of shares will increase by 400%, diluting existing shareholders heavily. Surprisingly, not long after this move, something weird would happen to the Beyond Meat stock. After the stock had crashed down to all-time lows, the stock would be picked up by a meme stock ETF and consequently jump by 127% the following Monday and again 146% the next day. While a rather interesting turn of events, this would do little to help save the actual stock. As of me writing this, sits at only 98 cents a share, right below $1. A truly fall from grace from its impeccable price at the start of its IPO. So where does Beyond Meat go from here? Well, it's hard to say, as 2025 has not been good to the company, and it doesn't seem that their situation will change in the years going forward. But there is still hope, as it seems that the price of beef around the world is rising rapidly, and the overall cattle population, at least for the US, is shrinking. This might create an opportunity for Beyond Meat to come back strong and conquer some of that market share that it has lost, since the gap between plant-based meat and regular meat seems to be shrinking, and as mentioned before, price is one of those things that really holds the company back. However, whether or not this is going to happen or if they're going to be successful despite or due to this, it's difficult to say, as predicting consumer trends and consumer behavior is just very difficult, if not impossible. As a final note, I would like to say that the story of Beyond Meat is a very sad one. It just goes to show that you can have good intentions, good products, and overall hype behind you, but sometimes it's just not enough to push your company to be successful. Other factors outside of your control also needs to be in your favor. Otherwise, you may just find yourself on the losing end. Now, I am no vegetarian or vegan, but I am rooting for Beyond Meat to find a way to turn their situation around, as we already have plenty of companies in the world who do not care about anything but profit and also contributes nothing. And I mean, it would be pretty nice to at least have one successful company out there that, while trying to make money, also prioritizes to make the world just a little bit better. Thank you so much for watching. Please leave a like if you enjoyed the video and subscribe if you want to see more. This has been another tale from Wall Street, and I'll see you in the next one.